Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Friday! It's the last trading day of the week, and I'm so excited to be with you here this morning. Well, before we kickstart the session, let's run through our daily routine, and let's quickly confirm that we are all on the same page. So I would like to know if you can see my screen clearly and you can hear my voice loud and clear. Please let me know in the comment section by typing in hi. Once we confirm this, then I know we're on the same page, and of course we can kickstart the session right away. And thank you very much for your feedbacks. All right. I can see a handful of comments here, and thank you very much, Modoc. Zamal, thank you very much. AK3, thank you. Who else is here again? Pizza Trend, good morning. ASD 198211. Hello, Carrie. Yes, happy Friday to you. Thank you very much. All right, so I would like to take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as we shall be diving into the financial landscape, looking at things from a technical standpoint, using our basic tools such as trend lines, key levels, and of course, chart patterns to unravel the potential trajectory of price action today. So far this week, we've done very well across board. We have been monitoring since the beginning of the week assets such as the US All Spot, the US Tech 100, the USDJPY, and of course the XAUUSD, which of course have been doing very well. And in fact, the star of the week is the USDJPY, which we saw how it had did a phenomenal move, scoping over 800 to 900 pips on this asset from multiple buy entries, then followed by the XAUUSD, which has also done pretty well since the beginning of the week. So we are going to be looking at all of this asset today. And remember that today being the last trading day of the week, it comes with its own peculiarity as market participants are expected to be rounding off their trading activities ahead of the weekend. So we are going to be taking all this into consideration as we could be seeing some profit taking activities today, which would reflect on the chart as price moving in the opposite direction of the prior leading price action. So I encourage us all to buckle up, grab your favorite beverages, and let's don't miss out on what we will be talking about today. And for those of you who are joining us for the first time, I do know you may be wondering what this is all about and what is it that we're actually doing here this morning. Well, as technical traders, we gather here every day, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York trading session. The session officially kickstarts about 10 a.m. UTC, 11 a.m. West African time, and I do recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Remember, my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Remember that the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do extend a warm welcome to you and encourage you to actively engage in the comment section below. So with that being said, here we will be diving right into the business for today. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is going to be affecting the market sentiment today. And for those of you who have been with us for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Well, so far this week, we've seen various impactful events, from speeches to key economic features, all of which have been projecting a resilient U.S. economy. And this, of course, has kicked away the idea of a rate cut coming in as early as the month of March. Now, as we head into the last trading day of the week, we do not have any we only have one impactful event, but what I did today was to also include the mid-tier economic features so that we can have a broader view of what majority in the market will be looking forward to today. So for today, Friday, January 19th, and based on the assets we have been monitoring since the beginning of the week, we shall be focusing on events from the United States and the Japanese economic docket. However, when we pull out the filter, we are able to see. So we shall be talking about the most important one. And the first one right here is the publication from the University of Michigan. And that is the Consumer Sentiment Index. Now, for those of you who do not know, the Consumer Sentiment Index is a very important key economic feature which measures gauges the prevailing sentiment and confidence levels among consumers within the U.S. economy, providing valuable insights into potential shifts in economic conditions. Changes in consumer sentiment can influence spending patterns, impacting various sectors and market condition. Now, from generally speaking, a high reading is considered as positive for the U.S. economy, which will dovetail to a positive traction in favor of the U.S. dollar, while a low reading is considered as bearish. Now, if we look at the previous data, that is for the month of December, it came in at 69.7, and we have, based on what is on ground, economists projecting 70 for the month of January. So based on what the expectations are, market is expecting a little bit of expansion in that particular area. So we look forward to see what the actual data is going to be on that one. Then another important event that we also want to be looking forward to today is the existing home sales change, which is usually released by the National Association of Realtors. And this data here provides an estimated value of housing market conditions. And remember that the housing market is considered to be one of the most sensitive factors to the U.S. economy, and it of course generates some volatility for the U.S. dollar. Now, generally speaking, a high reading is positive for the dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of November, the month-on-month, it came in at 0.8% expansion, though we yet to have a consensus yet. So we still look forward to see what the data will be. And usually, I think an hour or two before the event finally happens, we will be seeing something to compare in order to be able to make a well-informed decisions. Then later on today, we will be looking forward to a speech from Mary Daly, who is the San Francisco Federal Reserve Bank head, and she's also a member of the vote. She's also a voting member of the Fed's committee too as well, and she's going to be giving a speech later today. And whatever she says will be scrutinized for insight into the monetary policy of the Federal Reserve, and of course the health situation of the United States economy. So these are the events we will be looking forward to today, and of course they will be driving the market sentiment. And one thing we do know as technical traders is that the anticipation of this event usually affect the market sentiment in such a way that market participants in anticipation of this event will reflect on the chart as price action. And with that being said, here we shall be diving right into the business, and as usual, the first asset we will be looking at this morning is going to be the US All Sport. And so far this week, the US All Sport have done pretty well across since the beginning of the week, though it has been a roller coaster of buys and sells. We had situations where we sold at the beginning of the week, we bought too as well, and then we had selling opportunities before we finally saw the privilege of capitalizing on buying opportunities in the last 48 hours. And since then, we have continued to buy this asset. Though the week was not is not missing, we had some couple of losses too as well. But one important thing here is the fact that our profits outweighs the losses we incurred, hereby putting us on the positive side of our portfolio. Now, before we go into the details here, I would like us to quickly revisit how the week began and what actually led to the decisions we make, and this will also help those who missed out on our earlier editions to be on the same page with us. Now, with it as it is right now, at the beginning of the week, we did identify a range which was very, very significant, and that is the confinement of price action within the $73 area and, of course, the $72.40 level, giving us a flat range to work with. And usually, whenever we have a range like this, we usually expect price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, instead, we saw price break down the support line, triggering our first sell position. And I did told you prior to our live session on Monday that I do have a sell position triggered. And for those who missed out on this opportunity, you can look at adding a sell position at the breakdown of the $72 area, and that also moved significantly well. And if you had moved your stop losses accordingly, you must have been taken out with a reasonable amount of profit, or at a worst case scenario, break even. Then fast forward to Tuesday's trading session, we saw some interesting setup build up, especially after price action did break out of that descending trend line we were supposed to use to guide our bearish trading opportunities at the beginning of the week. However, we saw how price broke out of the rest of the descending trend line, and at this point we begin to consider buying opportunities. Though we did bought, we had a level marked out at the $72.60 area, and unfortunately for us, we had a loss on that one. Price went into a loss, giving us our first loss for the week. Price dropped down. We joined the bearish momentum as price came back below the descending trend line one more time. Now, as it is on Wednesday's trading session, we begin to notice how it has become difficult for sellers to break through the support line here. We saw how as soon as price got into the $70.72 area, we saw how buyers negated every attempt by the sellers to break through that particular structure. So as a result of this observation, we did saw a range marked out as we saw price confined within the 71.40 and of course the $70.72 area, giving us another flat channel to work with. And of course, you know how we do it. Whenever we identify a range like this, we wait for price to either break down the support line to give us an opportunity to sell, or price breaking out of the resistance line to give us an opportunity to buy. Now, the first thing that happened here during the New York session on Wednesday was that price first of all broke down the support line here, triggering our sell position. But unfortunately for us, that one went into a loss as we saw price climb up to break out of both the resistance line and that descending trend line to trigger our buy stop order above the structure to capitalize on the second buy position for the week. And since that moment, we have been buying this asset. As you will see, we had multiple levels to maximize the potential of this bullish move. We added more here, recouping the loss we incurred on that first sell position for that day, and then we kept on adding more position at this point in time. And during our session yesterday, I did mention that we move all our stop losses right below the structure here so that we can mitigate against any sudden pullback that might likely happen here. We had our sell position taken out, or buy position closed there, but remember what we said yesterday, that if price will climb back above the $73 area, we shall continue to look out for more buying opportunities. And with the breakout of the $73 area, we had another buy position, and in the last 24 hours we finally have a minimum of 2 buy positions running in profit right now, where the first buy position is currently running with about 150 pips in profit, while the second buy position is running with about 100 pips, running with a minimum of 250 pips running in profit on this particular one. So despite the losses we had during the course of the week, we were able to made significant amount of profit to recover the loss we made, and of course make some sweet profit on top of it. And for those of you who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And as it is right now that price action has moved significantly well in our favor, it is appropriate for us to move all our stop losses right now, secure the current buy positions while we stay vigilant looking out for new opportunities. And with the current situation here, I'm of the opinion that anywhere below the $74 area seems most appropriate to move all stop losses to. And always remember that we do want to be given enough breathing space for price action to move around, just in case we have some retracement before the next leg of bullish momentum will happen. Now, with a well secured position at this juncture, what is going to be our next plan for today's trading session? Are we going to continue buying this asset, or are there chances that price will drop to the downside from here, as everyone will be rounding up their trading activities ahead of the weekend? But before we go into the detail, it's very important for us to understand why price action has gained some significant traction in the last 24 hours and how we can use this information to position ourselves for the next move. Now, first of all, remember what I said here yesterday as we look forward to some reports from the EIA yesterday. And in fact, the report came in sharper than expected. Drawdown in US crude oil stock by 2.492 million barrels against the forecasted 313,000. That was a phenomenal variance right there, signifying that there is a increase in demand for oil, and as a result of that, the stockpile reduced significantly. And this is a plus for the US oil spot. Usually when the stockpile reduces like this, it shows that there is demand, and when there is demand for an asset, what happens? Price will always rise because of the short of the demand in the market. Now, we also witnessed a 40% output drop in North Dakota due to extreme weather conditions, which also countered fears of slowing economic growth. Now, the other factors behind the scenes is very well known. We have been talking about this for months now, which is the geopolitical tensions in the Middle East, which has persisted as the U.S. continued to continue to put airstrikes on the Iran-backed Houthi groups in the Red Sea. We had another 50 airstrike yesterday, and the Houthis have continued to attack U.S. cargo vessels on the Red Sea as well. So it is continuing, and this has also incited concerns about oil disruptions in the Middle East, and this definitely also is supporting and giving stability to oil prices at this point in time. Additionally, the dismal Eurozone data and concerns about China's economic weakness and expectations of ample market supply during the first half of 2024 restrains meaningful upside for oil prices. And it is also important to note that the recent US dollar rally, driven by reduced rate cut expectation, also poses a challenge for US denominated commodities such as the US oil spot. And what do I mean by that? Well, as the way things are going the last 2 weeks, we have seen how the US dollar has risen astronomically, and this makes the dollar very, very expensive for other currencies to buy. And when the dollar becomes so expensive, what happens? The demand for oil will reduce because majority will find the dollar very expensive and hereby trying to manage whatever stocks they have with them. So these are all factors. So if you look at all the factors I've laid out right now, you will see that we are within a limbo right now, as we have factors that supports the uptrend situation, and of course we have factors that are potentially limiting this uptrend situation. Now, to position ourselves for the next move, we need to understand the technical details of this chart by taking a closer look at the higher time frame, so we can have an holistic perspective into the current structure. So at this juncture, my first thing here, my caution is to advise us to move our stop losses. Let's secure the current position, as everyone will be very cautious in the market right now in making any aggressive bullish bets at this point. So let's quickly run through the daily time frame and let's see what we saw at the beginning of the week, and then we shall be talking about how to position ourselves for the next move. So right here on the daily time frame, what we did at the beginning of in fact, this structure here has remained the same in the last 2 weeks in this market. And of course, we did take into consideration the nature of price action since the month of September of last year. That's an historical data of about 4 to 5 months. And what we saw here was the fact that price action has been very bearish. And after connecting the series of lower highs, we have this beautiful descending trend line to guide our trading decisions for this week. Now, despite the strong bearish momentum in this market, we did notice something very strange happen during the first week of December. After seeing that despite the strong bearish momentum, sellers found it difficult to break through that area around the $68 and $69.50 level to emphasize some strength in buy power around that area. Now, this character continued into the early days of this year, as you saw another rejection here, and the inability of sellers to break down the previous low was a sign that buyers may gradually be gaining some momentum behind the scenes. And as a result of this observation, we begin to notice the potential of a reversal pattern if you consider the impulsive move that brought price into this area. As you will see, price action gradually transitions into what may look like a double bottom structure, where the neckline coincidentally shares a beautiful confluence with that key level at the $75 area, and of course that descending trend line we marked out earlier, giving us a sweet spot for new buying opportunities. Now, with the situation going on here, and in fact the last 3 days has continued to see a bullish traction in this market, hereby increasing the chances that price will break out of the neckline and that descending trend line to give us a potential uptrend move to the upside. So at this point in time, things are looking very bullish from a technical standpoint, and in fact on the 4 hours time frame, I was able to identify an ascending trend line which we've been using to guide our trading decision. Now, if you look at this from the mid-month of December, you will see that price action has been finding higher lows in this market despite the strong bearish momentum since September. We saw how these levels here is giving us signs that sellers are losing the momentum. Now, as it is right now, we finally saw price break out of that descending trend line for the first time in the last 4 to 5 months to further emphasize the strength of the buyers. Now, the question going into the new week, into the new week is, will price action continue in such a way that it will break out of the 75 area to the upside, or we will likely see some selling opportunities that will bring price to retest the structure that was broken before another wave will happen, or will price come back into that contraction? Well, to answer this, we will need to scale back down into our 1 hour time frame where we begin to see things more clearly. Now, right back to the 1 hour time frame, we have beautiful setups here. So you can see, so this morning while I was trying to, let me extend this one out a little bit so we can have a clean chart. And in fact, these are the levels we will be using to guide our trading decisions for today. So give me a moment. Let me do some little adjustment to this. And here we go. All right. So, like I said earlier, we have been buying this asset since yesterday after the breakout retest of the $73 area. And then we added more position. Personally, this morning, while I was trying to dissect and decipher what next the market would do, I marked out a new level at the $74.15 area, which was initially a selling niche at some point during the later part of the New York session yesterday. And if you had identified that level, well done to you. That means you really have been catching up on the sessions we've been having here on the Extra and Speed Live. So if you had capitalized on that opportunity there, well done to you. So you definitely be having a minimum of 3 buy positions running in profit at this point. I do hope you've moved your stop losses. Very, very important as we continue to monitor price action. So as today goes by right now, I want to share something with you which we will be using to guide our trading decisions for today. And of course, it is this ascending trend line here, which has played a major role in determining the uptrend situation in this market since Wednesday's trading session. And after connecting the pivots we have here, you will see a beautiful ascending trend line, which we will be using to guide our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, price still remains above the structure, so let's see more opportunities to buy this asset. Now, for those of you who had missed out on the breakout of the $74.50 level, that this move right here, well, it's okay. Let's see if the market will come back and retest the structure. If it does, and we continue to see buy pressure here and price still remains above the ascending trend line, we look out for more opportunities to maximize the potential move. And if price goes ahead to break out of that key level at the $75 area, we shall be looking out for more selling, for more buying opportunities. So this is how we are going to be managing a bullish expectations in this market. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could still come in the market as well. Now, since we have an ascending trend line, and in fact we saw how price broke down this descending trend line on the higher time frame, there are chances that price may still come back and retest the structures, any of the structures today, that is either this one or this one right here, to incite another uptrend continuation. So if sellers come in, we don't need to feel anxious or at all or feel scared, as it may be a retracement back into any of the structures to push price further to the upside. However, if price action breaks down this descending trend line, then price will be back within the seller's territory. Remember, this descending trend line we identified on the higher time frame has been supporting the bearish momentum in the last 4 to 5 months, and if price can come back below that structure, it will be a sweet spot to look out for selling opportunities to join that trend to the downside. So this is what I will be looking out for today. As the ascending trend line remains our yardstick to guide the bullish momentum, we shall not ignore the potential that if price breaks down the $73.50 level and that descending trend line, then we shall look out for selling opportunities in this particular market. So this is how we are going to be managing our trade today on the on the US All Spot. So I encourage us all to mark out these very important levels and of course the trend lines, as we will be needing them to guide our independent trading decisions for today. So this is my view on the US All Spot. If you have any questions whatsoever, or you need me to do some clarifications, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq, and the last um, 24 hours has been very, very profitable for us all in this community. And this came on the back of a very choppy start to the week where we had some couple of losses at some point. But finally, we were able to see a significant traction in price action, recovering the losses we made, and of course, making significant amounts of profit on top of it as we rode this bullish momentum all the way to the upside. Now, for the sake of clarity and for the sake of those who are joining us for the first time, I would like to quickly run through how the week began for us all in this community and what led to the decisions we made so far this week. Now, at the beginning of the week, we had a beautiful range identified where we saw price action confined within the 16,870 and of course the 16,800 to emphasize the level of indecision for the first 18 hours or so. Now this consolidation phase expanded, as you will see here, extending into that area around the 16,700, which happens to be our key level for the week, further compounding the uncertainty that gripped this market for the first 3 days of the week. Then we had some couple of buy positions there. We had some losses too as well during this old chopper situation as market participant anticipated the CPI data, I think on Tuesday or Wednesday. Now, during our Wednesday's trading session for Extra Speed Live session, we identified a demand zone around that 16,730 and the 16,670 where we said because of the fact that this area had been a strong demand zone, which of course has been negating all attempt by the sellers to break through. We shall look out for buying opportunities above that structure. Now, as a result of this, we bought above the 16,750 when price broke out of this level. That was on is it on Wednesday's trading session? Yes, a couple of hours into the New York session, that went into a loss. Then we saw price break down to 16,700, giving us some sell positions there, but did not really move very well as we moved our stop losses and price action took us out in a reasonable amount of profit, or at a worst case scenario break even. Now, during our live session yesterday, we begin to notice something interesting just right above and around that demand zone again as price action climbed back up again. And as we see, we had our center of focus between the 16,750 and the 16,700, where we said depending on the breakout of the structure will determine where we will be going. And as long as price remained above that demand zone, we were looking out for buying opportunities at the breakout of the 16,750. So right here, we had a breakout prior to yesterday's live session. Then we had multiple levels that we said we will be using to maximize the potential of this bullish move. And during our live session yesterday, we already had this buy position triggered at this point, and I did mention that we move all our stop losses, secure the current buy position, and then we saw price come back, take us out of the position, and then again continue the uptrend as we saw the 16,870 broken to the upside, and of course the 16,970 to maximize the potential of this bullish move. And since Wednesday, it has been more of buying this asset. As you remember, we had this ascending trend line in place. As we said, as long as price remains above the ascending trend line, we will continue to maintain a bullish bias on this asset. And for those of you who capitalized on this opportunity, well done and kudos to you for capitalizing on this move and of course maximizing the potential of the bullish outlook of this market. So well done to you guys. Now, with the situation we have right now, and since price action has moved significantly well in our favor, we do want to be moving all stop losses right now, securing the current buy position as we look out for new opportunities in this market. Now, from the way things are right now, I'm suggesting that anywhere around the 17,050 and the 17,020 seems most appropriate to move all stop losses. Still, anywhere just right below that ascending trend line makes quite a lot of sense right now. Move your stop losses to this zone, and please ensure that you give enough breathing space for price action to move around. Now, with a well secured position at this juncture, how do we intend to manage our position on this asset as we gradually approach the end of the week? And of course, we know that market participants will definitely be rounding off on trading activities as everyone looks forward to the economic features coming in from the United States today, which includes what's the name I named earlier again? Let me see. Okay, we have the U.S. Michigan Consumer Sentiment Index, we have the home sales, and of course the speeches by the FOMC members for fresh new impetus today. Now, before we go into the decisions we are going to be making, let's refresh our memories as to what is happening from an holistic perspective. Now, on the daily time frame where we started our analysis for the week, remember we spotted an ascending trend line which emphasized the strength of the bias since the month of September of last year, giving us a beautiful ascending trend line to work with. And in addition to the ascending trend line was a range which we did identify that has been in existence in the last 5 to 6 weeks. As you will see, price cut within the $17,000 and the 16,200 level, giving us a consolidation phase. Now, whenever we have a range like this, we want to see price action either breaking down or breaking out of the range to give us an opportunity to trade. Now, for the fact that price action is sitting above that ascending trend line, it makes quite a lot of sense for us to buy. And with our key level at 16,700 and the inability of sellers to break through the 16,700 throughout the course of the week, was a much more was a good confirmation for us that buyers may be taking over this market this week. So with that said, we bought the breakout of structure, and now that price has finally broken out of the resistance of this range, the question going into today's trading session is, excuse me, will this platform become a new zone for buyers to push price further to the upside, or will this breakout turn out to be a false one? So with that being said, here we shall be scaling back down into the 1 hour time frame where we want to be positioning ourselves for the next move. Now I would like to allow the $17,000 mark to reflect on the 1 hour time frame, as it's going to be playing a major role in guiding our trading decisions for today. So now with things going on right now, so let me just let me turn this into okay, so we have the 17,000. Okay, we have $17,000 right here. It has been broken, and right now price remains above the trend line, sorry, above the $17,000 mark. Now coupled with this is the ascending trend line we spotted here after connecting the series of higher lows in the last 17 hours in this market, as you will see right here. So price remains above both the ascending trend line and that level at the $17,000 area to further make us feel comfortable in our buy position. So we'll continue to look out for buying opportunities from here. Now with the situation we have here, I'm still looking out for more opportunities to maximize this bullish move, as I want us to be having another buy stop order above the 17,110 area, as this is the highest point price action has been for this week. So you do want to be marking that level out on your chart right now. We can afford to risk another buy stop order above that structure, since we are tremendously profitable on this asset this week. And if it doesn't work, we only know that we are risking some of the profit we had made so far this week. So placing another buy stop order above that structure makes quite a lot of sense at this point in time. So we maintain a bullish bias on the USTech100. However, if it so happens that this ascending trend line gets broken to the downside and then breaking this level around the $17,050 area, which interestingly shares a confluence with this ascending trend line, then we might be seeing the opportunity of selling around that particular area. Now this could incite a sell-off as market participants take some profit ahead of the weekend. Now please, let's take note of this area as well, as if price can break down the ascending trend line and the 17,050 and possibly retest the structure with continued selling pressure, we are looking for a downtrend move. So let's mark out these levels, and please note that our center of focus for today's trading session is simply between the 17,050 and of course the 17,110 area, where depending on the direction of the breakout will determine where we shall be ending the week today. So I encourage us all to mark out these levels, as we shall be needing them as a reference point to guide our independent trading decisions for today. So let me just zoom it in a little bit so we can see things more clearly. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in. Hello, Giovanni. Good morning to you. Caterpillar 1018. Good morning. I'm glad to have you guys around. In the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move right into the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. This is one of the most profitable assets on our watch list for this week, as we were able to scoop in a significant amount of profit, dovetailing to over 800 to 900 pips from multiple buy entries on this particular asset. And in fact, it has been so wonderful. Remember, we haven't traded this asset for about 4 to 5 months, only for me to see an interesting setup during the course of the weekend and decided to include it into our watch list. And thank goodness it did very, very well for us all this week. And for those who are part of this profitable journey, well done and kudos to you for being on standby. Now, for the sake of those who are not part of our earlier editions and for the sake of educational purposes, let's quickly run through how the week started for us all and what led to the decisions we made at the beginning of the week. Now, the first thing we did observe on the USD JPY was the fact that price action started the week right above our key level situated at the 144.800. Now, remember how we use our key levels in this community, especially when price remains above the key level. We want to be looking out for patterns and structures that support the idea of buying. And thank goodness, within the first 10 hours of the week, we were able to see a beautiful trading setup where price was initially confined within the 145.240 and the 144.870, giving us a flat channel to work with. And you know how we do it whenever we have a range like this. We want to wait patiently, waiting for price to either break out of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And at no point in time did we see price come even close to the support line of that range, hereby welcoming the idea of looking out for buying opportunities at the breakout of that resistance line at the 145.240. And remember that we had multiple levels on this asset as we look out for more opportunities to maximize the potential of this bullish move. So we identified levels such as the 145.550, the 145.800, and of course the 146.450 to continue to ride the momentum all the way to the upside. Fast forward to Wednesday's session, we continue to add more positions, had a breakout of the 147.400 and of course the 148.200, where we had a culmination of this buy position. And during our live session yesterday, I did mention that we were taking out of all buy positions after moving our stop losses accordingly. And one of the things we talked about here yesterday was the fact that the bearish momentum we saw here that started during the later part of the New York session on Wednesday may be as a result of some profit-taking activity, as those who capitalize on that significant move in bullish traction since the beginning of the week may likely be closing in some of their profit, inciting this minimal downward situation as we saw here. Now, during our live session yesterday, we did emphasize that price still remains above this ascending trend line. Hence, we want to continue to look out for patterns and structures that supports the idea of buying an asset. And as a result of the fact that price remains above the ascending trend line, we decided that we will be monitoring how market will react to this area between the 147.950 and the 147.700 to guide our trading decisions for yesterday. And one interesting thing about the support line of this range was the fact that it shares a confluence with this ascending trend line here. Now, the fact that price still remains above the ascending trend line welcomes the idea of placing a buy stop order above the resistant line of the range to capitalize on the uptrend continuation. And in fact, we saw price break out of that structure. And in fact, if you had missed out on that opportunity, the market was kind enough, came back to retest the structure as we saw price hit the 148.500 level during the early hours of today, giving us, let's see how many pips was that, from here to here was about 87 pips in profit, while the second buy position here was about 60 pips in profit. As you will see, it was a very profitable trade, and I do hope you moved your stop losses accordingly. If you done so, you must have been taken out of your buy positions. And well, I'm beginning to notice this morning while monitoring this current structure, as you will see now, the ascending trend line has finally been broken to the downside. And remember what I said here yesterday, that if price breaks down this ascending trend line and retest the structure, we shall be looking out for selling opportunity. And this was exactly what happened about a couple of hours ago. We saw price break down, retest this ascending trend line to incite this bearish momentum. And if you are taking advantage of that opportunity, well done and kudos to you for being on standby to capitalize on that move. And if you have your sell positions running right now, I'm going to be encouraging you right now to move your stop losses on that first entry. Move it to your entry point right now. Let's secure this at break even. So if price goes back up, the worst case scenario we'll have there is going to be break even. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Well, if you would ask me, the sudden bearish momentum we saw here is like a myth to me, as I wasn't all factors behind the scenes here were actually supporting the uptrend situation. The Japanese consumer inflation this morning aligns with expectations. Market sentiments favor the Bank of Japan maintaining its ultra dovish stance, and today's released data confirming Japan's eased inflation supports the view that the Bank of Japan will delay its pivot away from the dovish policy. Now, the positive tone in the equity market weakens the JPY safe haven asset appeal, while reduced odds of aggressive Fed policy easing boost U.S. Treasury bond yield, widening the U.S.-Japan rate differential and diverting flows from the Japanese yen. However, this sudden sound downward pressure for me, like I said earlier, was like a myth to me. And in light of this recent development, it is crucial to exercise patience and caution in seeking significant trading opportunities before committing to any aggressive bets at this point. The overall market outlook remains very bullish for me, if you would ask me. As you will see, the week has been strongly bullish and price still remains at a very high situation here. Now look at what has been going on in the last 2 days. You will see price action has been confined within that area around the 148.500 and the 147.700 area, emphasizing the level of indecision at this point in time. Now that we have a situation where price has broken down that ascending trend line, we have no other choice than to continue to look out for selling opportunities at this point. And the only condition that will make me want to consider buying these assets is for price action to climb back above this ascending trend line, which is here, which interestingly shares a confluence with the 148.500 before considering buying. And if price can go on to break out of the 148.800, we shall be looking out for more opportunities to buy. But as it is right now, we shall be holding a bearish momentum. So I'm looking out for more opportunities at the breakdown of the 147.950. Have your self-stop order there. For me, it has already been triggered. And let's see if price will continue to the downside. And in fact, if price can break down the 147.700, we might likely be seeing a further slide to the downside, maybe to test this descending trend line that was broken during Thursday's trading session. So remember, we have this descending trend line here, which was broken to inside the temporary second leg of bullish momentum here, which happened to have failed. So price may still come back to retest the trend line, giving us about let's see how many pips is that from here to here. It's about 120 pips thereabout. And if price drops below that trend line, we could see new selling opportunities. However, if price drops and gets into the structure, please move all your stop losses, secure the positions while we exercise patience and wait to see how the market is going to be reacting to this trend line. Now, if we begin to see something like a double bottom structure here or a reverse pattern, whichever case that comes up, the neckline of that reversal pattern, the breakout of the neckline, will be a beautiful opportunity to join the uptrend move from there. So let's see how things is going to play out from here. We maintain a bearish bias, looking out for more selling opportunities below the 147.950 and the 147.700. And if it continues, the 147.400 area is another area we're looking out for more selling opportunities. And remember what I said earlier, I won't be buying unless price action climbs back above this ascending trend line at the 148.500, and a further breakout of the 148.800 will welcome more buying opportunities. So mark out these levels and let's use it as a guide to determine our next course of action for today. So these are my views on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. So as always, I will just take 5 seconds off because I'm already out of time. And let's see if there are any questions before we move on to the last asset on our watch list for today. Hello, Steamroller. It's been a while. Trust you're doing very well. Glad to have you around with us this morning. Trust you're doing very well, and I hope you're preparing for the weekend. Jonomix, good morning to you too. Glad to have you around. So in the absence of no further questions, I want to assume we are all on the same page, and in that regard, we shall be moving on to the last asset on our watch list. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot this week, we've done tremendously well on this asset. Remember, we have been selling this asset since the beginning of the week before price action found a temporary demand area around the 2006 and $2002 area, inciting new buying opportunities for us in the last 24 hours. Well done, kudos to everyone. But let's quickly run through how the week began and let's see what led to the decisions we made. Now, at the beginning of the week, we have the situation here where price was confined within the 2058 and the 2046, though the week started on a strong bullish note, as we saw how price started the week at around the $2,046 area, as you will see here, then culminated around the 2058, where we begin to notice how sellers were negating all attempts by the buyers to break out of that structure. And as a result of this observation, we decided that due to this scenario, we may be seeing price drop to the downside. And remember that we had this ascending trend line marked out from last week Wednesday's trading session, where we said if price breaks down the ascending trend line and that $2,053 area just right within the range we identified earlier, we shall be joining a bearish move to the downside. Now we saw price break down, retest the structure earlier on Tuesday, triggering our sell position, and since that moment we have been adding more sell positions to our existing trade, riding that momentum all the way to the downside, as you will see right here. Unfortunately for us on Wednesday's trading session, we did identify a simple trading setup on the 50 minutes time frame that was giving us some bullish potential as a result of the inability of sellers to break through that 2022 area. We bought, but unfortunately we were taken out of that position in a loss as price action dropped further to the downside. We of course took advantage of that one. We rode it right into the $2006 area, and as soon as price got into the structure, we begin to notice how it becomes difficult for sellers to break through that particular structure, and this whole situation led into some higher lows here. And as a result of this, we decided that if price can break out of the $2013.50 level, we shall be buying yesterday's New York session, and that was exactly what happened. We saw the breakout, retest of structure, and since that moment we have been buying the XAUUSD. And right here yesterday we also talked about this level at the 2022, that we will be adding more positions to our existing trade, and finally the 2035 area where we said price action, if it breaks out and retest, we will add more positions to that to our existing trade. Now price action is gradually approaching that level, and for those of us who did capitalize on this new buying opportunity, well done to you, as you will be currently running with about 180 pips on the first buy position and about 95 pips on the second buy position, running into approximately 300 pips, which is not bad for a 24 hours move. Well done, and kudos to you for capitalizing on all of this. Now for those of you who still have a buy position running at this juncture, kindly move your stop losses. Let's secure this current buy position while we wait and see how the market is going to play out today, as market participant will be gradually rounding off trading activities ahead of the weekend. So I'm suggesting anywhere around this area between the 2027 and 2050, and that entry point seems most appropriate to move all stop losses to. Give enough breathing space for price action to breathe, as we may see some retracement back into structure before another wave of bullish momentum will happen. So going into today's trading session, how do we intend to position ourselves for the next move? Are we going to continue buying, or is it time to start considering selling opportunities on this asset? Let's quickly take a look at the fundamental factors which has been supporting the bullish momentum we are witnessing in recent times. Now, with a profit of over approximately 300 pips from two buy positions running right now, gold price reclaims lost ground, especially during the Asian session stroke the early hours of the UK session. And as it is right now, gold rebounds as the US dollar recovery slows down, coupled with the US Treasury yield consolidating at around the 4.14%. And of course, the resilient US economic data and the Fed's dovish stance dampen expectations of an imminent rate cut, supported by a decrease in weekly initial jobless claim to 187,000 as we saw yesterday, and an improvement in the January Philadelphia Fed manufacturing survey to minus 10.6. Now, upbeat economic data favors the Fed's tighter for longer narrative, potentially boosting the US dollar. However, today, market participant focus will be on the preliminary US Michigan Consumer Sentiment Index, existing home sales, and speeches from the Fed officials. That is Daly, who is going to be speaking later today. And at this juncture, it is very, very important that we secure all current buy positions and be vigilant, as the current fundamental factors may not fully support the ongoing uptrend situation here. Now, if we look at things from a technical standpoint, looking at this whole structure here, remember that our key level for this week was situated at the 2035 area, after which we saw a breakdown of that structure happen here on Wednesday's on Tuesday's trading session. And from a technical standpoint, when price breaks down a structure like this, we expect that some point in time price may come back into the structure to inside the second leg of the bearish momentum. Now, as price gradually approach this important structure, as soon as it gets there, we want to be moving our stop loss to secure more buy positions as we exercise patience and see how the market is going to be reacting to the structure. Now, depending on what happens here will determine if we are going to be buying or selling. Now, to paint the scenario from a technical perspective, if buyers find it difficult to break out of the structure and selling pressure persists there, a reversal pattern like a double top structure, head and shoulder pattern will be inciting selling opportunities. So we just want to be marking out the neckline of that reversal pattern. If it happens, then the breakdown retest will welcome the downtrend situation. However, if price breaks out of that 2035 and a retest of structure happens, this could incite more buying opportunities for us. So we are approaching a crucial juncture in this market where we will need to exercise patience to scale through that particular area. Now, in addition to that, we have an ascending trend line we will be using to guide our decisions for today. And as long as price remains above, it still supports the idea of buying that asset, even though if seller pressure comes in around the 2035, that is, if we see something like a reversal pattern here, bringing price into this area, you move your stop loss accordingly, then wait to see how the market reacts to this trend line. If it finds buy pressure, it could incite more buying opportunities, but a breakdown will incite a sell-off to the downside. So let's keep this in mind and continue as we continue to monitor price action. Then one more thing I would like to share with you here on the XAUUSD, that is the 4 hours time frame. I want to quickly refresh our memories as to what we saw on the 4 hours time frame, which is in alignment with what the current structure is doing right now. So for those of us who were part of the first session of the week, remember what we saw here on the 4 hours time frame after considering the nature of price action since the mid-month of December. Now, what we saw here was quite interesting as we quickly noticed how the 2015 and $2025 zone had played a major role in negating all attempts by the sellers to break through that structure, making it a strong demand zone for market participants in this market, as every attempt by the sellers to break through the structure has been met with strong resistance from the buyers, as you'll see consistently happen here. Now, something interesting happened at the beginning of this year. The beginning of this year was characterized by profit-taking activities, as we saw people selling their gold for the US dollar as a result of the resilient US economy, giving us a couple of descending trend line here after connecting the series of lower highs. Now, look at this trend lines here. We have a couple of them. And last week, Friday, we saw this impulsive move that broke out of this descending trend line. And from a technical standpoint, we expect that when price break out of a structure, we expect it to come back to retest the structure to anticipate another wave of bullish momentum. And look at what happened here. As soon as price came to retest the trend lines, we saw some buy pressure resume, and since then price had continued to climb high. So now the question here is, was this going to be the beginning of the second leg of the bullish momentum? Well, that will be answered if price action does break out of our key level at the 2035. Then we want to be adding more position to continue that uptrend move. However, if it fails, that is, buyers find it difficult to break through the 2035 and continue selling pressure happens here, we may be having a lower high that will incite a downtrend move where we will be having a beautiful descending trend line to support the bearish bias to the downside. So we are at a very crucial juncture in this market. So I just wanted to show you what things are looking like from an holistic perspective on the 4 hours time frame. So let's keep this in mind and let's continue to monitor price action from here. So our center of focus for today, like I showed you on the 1 hour time frame, is going to be around this ascending trend line, and depending on how market participant reacts to the 2035 area, it will determine if we are going to be buying more or getting ready to sell and join the next bearish momentum to the downside. So this is my simple view on the XAUUSD. Though I maintain a bullish bias, but we are not going to be ignoring the potentials that sellers could push price to the downside. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions, after which we will be rounding off for today's trading session. Thank you very much, guys. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we are coming to the end of the Extreme Speed live session, and it has been a wonderful and tremendous week for us all in this community, as we have been monitoring 4 of the major assets on our watch list, which includes the US All Spot, the USTech100, the USDJPY, and of course the XAUUSD, all of which did very well for us this week, though we had some losses, but our significant amount of profit outweighed whatever loss we incurred, making us be on the positive side of our portfolio. And once again, congratulations to everyone who was part of this profitable journey. And I do hope that during the course of the session you are able to mark out the levels we illustrated on the chart. If you do, please, I encourage you to exercise patience and wait for the structure to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to ensure you have a well-defined risk management strategy in place, which is consistent with all the trades you take from your portfolio. For those of you who joined us for the first time today, I do hope you gained 1 or 2 things from what we discussed here today. And if you do, you want to be part of our subsequent editions, trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I want to wish us all the best of luck, and I look forward to seeing you same time on Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to start the new week on a fresh new note. It has been a wonderful moment. I really enjoyed everything. Steamroller, thank you very much. Have a great weekend too. Joseph, glad to have you around with us, and I wish you a happy weekend. Trade smart, trade consciously, and looking forward to see you on Monday again as we come here for a new session. Do have a wonderful weekend, everyone. Bye bye.